How did we get here? Do we miss our way? The Securities and Exchange Commission is supposed to be an independent agency that secures investors, maintains fair and orderly markets, and facilitates capital formation. However, under the leadership of Gary Gensler, this narrative has flipped, and the SEC is more like a ravaging beast and a thorn in many crypto's flesh. It has become a rogue regulator that threatens the innovation and growth of the US capital markets. According to public opinion, Gensler has shown disregard for the rule of law, a lack of transparency and accountability, and hostility towards cryptocurrencies. So what has he done this time? To keep it short, he's done many things. In a June 8th speech in the Piper Sandler Global Exchange and FinTech Conference, Gary Gensler compared the current crypto market to the 1920s US stock market, saying that it is full of hucksters and fraudsters and Ponzi schemes. So just as Congress cleaned up the stock market by enacting security laws, the current SEC can also clean up the crypto market by applying these laws, he argued. A tweet including the link to his claims read, "Just in, SEC Chair Gary Gensler says crypto is all hucksters, fraudsters, and scam artists." In the talk, Gensler appreciated the Securities Act of 1933 and the Securities Exchange Act of 1934, claiming that these laws allowed the US securities markets to thrive over the next 88 years. He further argued that crypto security markets of today should also benefit from these laws, as they're not less deserving of protections the laws provide. Pointing to the court ruling against Telegram Open Network, Gensler explained that crypto asset securities are not exempt from security laws even if they have utility. Some promoter of crypto asset securities contend that their token has a function beyond simply being an investment vehicle. As the courts in Telegram case and others have said, however, some additional utility does not remove crypto asset security from the definition of an investment contract, Gensler said. What the SEC chair means is that crypto security exchanges must comply with security laws, including the requirement to separate the exchange, broker-dealer, and clearing functions. From his perspective, this separation helps mitigate the conflicts that can arise with the commingling of such services. However, Gensler denied that this separation isn't possible, saying that separating these three functions simply requires work. He proceeded with his argument that the current crypto market is rife with scams that have arisen because of the industry's lack of compliance with security laws, stating, "With wide range non-compliance, frankly, it's not surprising we've had many problems in these markets. We've seen this story before. It's reminiscent of what we had in the 1920s before the federal securities law were put in place. Hucksters, fraudsters, scam artists, Ponzi schemes." In Gensler's view, the solution is to make sure that crypto security issuers comply with the law. This is because these scams are more likely to happen in markets whose issuers and intermediaries fail to comply with foundational laws. However, the predatory nature of cryptocurrencies by the SEC has been questioned by many, and as chair of the SEC, Gensler has been heavily criticized within the crypto industry, especially since the SEC filed lawsuits against crypto exchanges Binance and Coinbase. According to critics, Gary had an overly expansive view of the SEC's regulatory authority and is driving innovation out of the US. The SEC launched two major legal actions against Binance and Coinbase, accusing the exchange of flouting US securities laws, and at the heart of this offensive is one man, Gary Gensler. Gensler looks like the crypto industry's worst enemy, issuing what sounds like a blanket disapproval of crypto's whole point of being. He once said, "We don't need more digital currency. We already have a digital currency. It's called the US dollar. We have not seen over the centuries that economies and the public need for more than one way to move value." But in the beginning, this was not so. Gensler wasn't always a critic. Before he assumed the SEC hot seat, he was fresh from teaching courses on digital currency at the Massachusetts Institute of Technology and consulting with that school's digital currency initiative, and that was quite impressive. Also, here was the tone that Gensler struck in an op-ed for CoinDesk in December 2019. Though literally thousands of projects have yet to land on broadly adopted use cases, I remain intrigued by Satoshi's innovation's potential to spur change, either directly or indirectly as a catalyst. The potential to lower verification and networking costs is worth pursuing, particularly to lower economic rents and data privacy costs, and to promote economic inclusion. He added, further, shared blockchain applications might help jumpstart multi-party network solutions in the field that historically have been fragmented or resilient to change. Even in this slightly less ambitious form, acting as an innovative irritant to incumbents and traditional technologies, cryptocurrencies and blockchain technology have already prompted the real change and can continue to do so. Fast forward to March of 2021, in his nomination speech before the US Congress, Gensler praised the transformative role of the financial technology, not crypto in particular, saying that markets and technology are always changing. Our rules have to change along with them, and that financial technology can be a powerful force for good, but only if we continue to harness the core values of the SEC in service of investors, issuers, and the public. Having said that, since his first year as the head of the SEC, Gensler has been unwavering in his stance that most cryptocurrencies fit the definition of securities. Crypto exchanges need to register with the SEC, and stablecoins are poker chips for gambling on crypto, which presents a systemic risk for the economy. Gensler also called for Congress to take steps towards a clearer regulation framework for crypto exchanges, noting that right now there is not a market regulator around these crypto exchanges, and thus there is no protection around fraud or manipulation. However, in April, Gensler raged towards Bittrex, calling it a security. The crypto community experienced a massive backlash following a tweet by Gary Gensler. His tweet was in response to the SEC's announcement that it had charged crypto trading platform Bittrex Inc., its co-founder and former CEO William Shahara, and its foreign affiliate Bittrex Global GmbH with various regulatory violations. Several demeaning nicknames rolled out for Gensler as a result of this move. In his tweet, Gensler commented, "Today's action, yet again, makes plain that crypto markets suffer from a lack of regulatory compliance, not a lack of regulatory clarity. The SEC charges against Bittrex include operating an unregistered securities exchange, broker, and clearing agency." Gensler's statement sparked outrage among many in the crypto community, who argued that the primary issue in the space is the lack of clear regulations. They further asserted that Bittrex should not be considered a securities exchange as it primarily facilitates the trading of digital assets. Some users even went ahead to question whether all exchanges could now be considered security exchanges, given the SEC's approach to Bittrex. Plus, several comments on Gensler's tweet demanded the need for regulatory clarity in a rapidly evolving world of cryptocurrencies. A user asked which one of the top 10 coins are securities, stating that the industry needs more regulatory clarity. Another comment highlighted the need for the SEC to update its rules and approaches to keep pace with technological advancements and evolving business models. Another user questioned Gensler, "Who was the protected though, Gary?" Critics of the SEC's actions emphasize that attempting to apply outdated laws to modern technology is counterproductive and only serves to stifle innovation. One user encouraged Gensler to think about the future, stating, "Throttling technology only moves it abroad. Zoom ahead 5 years and think about your reputation. Future thinking, Gary." On the other hand, the Cardano founder Charles Hoskinson has firmly denied the SEC's allegations that Cardano's native ADA token qualifies as a security. "The facts might be inconvenient to the SEC, but are facts," Hoskinson tweeted, pointing out that no ADA was sold in the US and that the originating finance was done in Japan with vouchers that were later converted into ADA in an airdrop in 2017. His tweet came in response to a lawyer and crypto enthusiast Bill Morgan, who argued that adding functionality and marketing a product as done with ADA does not equate to selling a security. Perhaps we should remind Gensler and the entire SEC that Cardano was launched as an open source public blockchain in 2015 by Hoskinson, one of the co-founders of Ethereum. The project conducted its initial coin offering in Japan, thus earning it the nickname Japanese Ethereum. At the time, Cardano was one of the largest ICOs ever held in Asia, and ADA rapidly became one of the top cryptocurrencies by market capitalizations. Then the project became known for its rigorous peer-reviewed approach to blockchain development, but it continued to face criticism for being vaporware due to the apparent lack of viable use cases. In a statement, IOG also responded to the SEC's claims, arguing that the ADA token is not a security under US securities laws. Many think that Gensler should conserve his consistency for other activities than clawing out cryptocurrencies with his predatory nature. Time will tell whether the economy will save itself from breaking apart due to the SEC's actions. But that's going to do it for today's video. Make sure you click on the subscribe notification buttons, and we'll see you in the next video.